We are covering these 7 top actively traded stocks that are bullish today. While watching price actions, let us inform you. Our review on LUV. Southwest Airlines Company is a major U.S. carrier known for its budget-friendly fares, customer-first approach, and an all-Boeing 737 fleet. It flies to 117 destinations across the U.S. and nearby international markets, offering a mix of affordable and premium fare options. But right now, the airline is navigating a rough patch, making job cuts while also gaining momentum on Wall Street. The latest development? Southwest is eliminating 120 more jobs across 4 U.S. airports, marking an extension of its first-ever round of involuntary layoffs. For a company that has long prided itself on job security, this is a significant shift. It's a sign that Southwest is taking aggressive cost-cutting measures to stay competitive in a tough airline environment. Yet despite the layoffs, Southwest stock has been on a tear, up 8.4% in the past week. Why? Analysts are starting to warm up to the airline strategy. Melius Research upgraded the stock from sell to hold, citing improvements in performance and a more balanced risk-reward profile. UBS also lifted its rating from sell to neutral, praising Southwest's bolder revenue initiatives, like finally charging for checked bags, a major departure from its long-standing bags fly free policy. On top of that, option traders are getting bullish with a noticeable spike in call options. That suggests investors are betting on Southwest's turnaround efforts to pay off. The airline is clearly in a transition phase, cutting costs, reshaping its revenue model, and working to stabilize operations. If it can execute these moves effectively, there could be more upside ahead for investors. Our review on HAIN. HAIN Celestial Group Incorporated is all about health and wellness, bringing natural and organic products to households in over 70 countries. From snacks and baby food to teas and plant-based beverages, the company has built a strong lineup of brands like Garden Veggie Snacks, Celestial Seasonings, and Earth's Best. Operating across North America and international markets, HAIN serves a mix of specialty and mainstream retailers looking to meet growing consumer demand for clean-label, better-for-you foods. But lately, the company has been navigating some challenges, and investors are watching closely. HAIN Celestial stock has been under pressure as it works through restructuring efforts and cost-cutting initiatives aimed at improving margins. The natural and organic food space is competitive, and inflation-driven cost increases have squeezed profits, making efficiency a key priority. Despite the headwinds, there are signs of a potential turnaround. The company has been focusing on streamlining its portfolio, doubling down on its strongest brands, and exiting less profitable businesses. Analysts are paying attention to whether these strategic moves will start translating into stronger earnings growth. If HAIN can execute on its cost-saving measures and leverage its brand strength, the stock could see some upside. Investors will be looking for clearer signs of momentum in the next earnings report. Our review on NCLH. Norwegian Cruise Line Holdings Limited is a big name in the cruise industry, running 3 major brands: Norwegian Cruise Line, Oceania Cruises, and Regent Seven Seas Cruises. Between them, they've got 32 ships sailing all over the world from the Caribbean to Europe, Asia, and beyond. Whether it's casual family vacations, high-end luxury getaways, or full-on adventure cruises, Norwegian offers a little something for everyone. Think multiple dining options, entertainment, spas, casinos, and even a go-kart track on some of their ships. They're all about creating those memorable, Instagram-worthy experiences at sea. Now, let's talk about the numbers. Norwegian just reported Q4 earnings, and the results were solid. Revenue came in at $2.11 billion, up 6.2% from last year. And while that was right in line with what analysts expected, the real highlight was an earnings beat. That's always a good sign, especially in a competitive industry like this. CEO Harry Sommer called 2022 for a transformative year, pointing to big strategic moves like a new shipbuilding program, upgrades to their private island, Great Stirrup Cay, and brand initiatives designed to enhance the guest experience. Basically, They're laying the foundation for long-term growth. But here's the thing. Cruise stocks, including Norwegian, have been struggling lately. The broader travel and vacation industry has been under some pressure, and Norwegian stock has lagged behind both its cruise peers and the S&P 500. That said, Morgan Stanley just upgraded the stock from underweight to equal weight. Translation? They think the worst of the underperformance might be behind it. The firm did lower its price target from $27 to $22, but they also acknowledged that Norwegian has made real progress in managing costs and narrowing the gap between revenue and expenses. So what's next? Investors are watching closely to see if Norwegian can keep its costs in check while continuing to attract strong bookings. The cruise industry has been on a roller coaster ride over the past few years, but if Norwegian can execute on its long-term strategy, this stock could be setting up for calmer waters ahead. Our review on JPM. JPMorgan Chase Company is a financial giant, handling everything from consumer banking to high-stakes investment deals. Whether it's managing checking accounts or billion-dollar mergers, it's a key player in global finance. And at the helm, Jamie Dimon, the longtime CEO who just confirmed he's staying on a few more years before eventually shifting to a chairman role. That's big for investors. Dimon's leadership has been crucial in navigating economic ups and downs. On the shareholder side, JP Morgan is hiking its dividend to $1.40 per share, payable on April 30th. While the yield sits at 2.1%, the company's financial strength makes it a reliable long-term payer. With a payout ratio of just 24%, there's plenty of room for future growth. Inside the bank, some cultural shifts are happening. JP Morgan is rebranding its diversity, equity, and inclusion (DEI) efforts to diversity, opportunity, and inclusion (DOI), while adjusting some training programs. And Dimon isn't backing down on the return-to-office policy, insisting in-person work is essential, despite employee pushback. Beyond JP Morgan's internal moves, Dimon shared his take on the broader economy. He described it as a soft landing, but warned that geopolitical tensions and potential tariffs could bring turbulence. Investors listen when he talks. His market calls are often on point. For shareholders, the message is clear. JP Morgan is doubling down on stability. With Dimon staying on, a dividend boost, and strong financials, it's positioning itself as a steady player in an unpredictable market. Our review on INFY. Infosys Limited is one of India's biggest tech giants, helping businesses worldwide tackle digital transformation with AI, cloud computing, and cutting-edge consulting. Whether it's banking, retail, or healthcare, Infosys is behind the scenes, making companies more efficient and future-ready. Now, here's what's catching investors' attention. Infosys just made headlines with a fresh batch of deals and a strong push in AI-driven services. The company's Infosys Topaz and generative AI labs are becoming a bigger part of its strategy, tapping into the massive demand for automation and data-driven decision-making. This move isn't just about staying relevant. It's about staying ahead. Financially, Infosys is holding steady, but like most IT firms, it's dealing with cautious enterprise spending. Global economic uncertainty has slowed down tech investments, but Infosys is betting big on long-term contracts and strategic partnerships to keep revenue flowing. Analysts are keeping a close eye on deal wins. Any major contracts in the pipeline could be a catalyst for the stock. Another key factor? Infosys cost management. The company has been tightening expenses while maintaining margins, which is crucial in a competitive industry. Investors appreciate a company that can balance growth with profitability, and Infosys has been walking that line well. Looking ahead, Infosys is banking on AI, cloud expansion, and steady contract renewals to fuel its next phase of growth. If enterprises start increasing tech budgets again, Infosys could be one of the first to benefit. For investors, it's a game of patience. But with strong execution and a forward-thinking approach, Infosys remains a solid player in the tech space. Our review on RXRX. Recursion Pharmaceuticals Incorporated is a cutting-edge clinical-stage company focused on revolutionizing drug discovery using its unique Recursion Operating System, OS. This platform blends biology, chemistry, and advanced computational tools to accelerate the development of new treatments. With a pipeline including promising treatments for conditions like cerebral cavernous malformation and neurofibromatosis, Recursion is positioning itself as a leader in the tech bio space. Now, let's talk about why Recursion stock has been making waves recently. The company just completed a $500 million equity offering, and that sparked investor interest. You'd expect some turbulence around such a big move, but Recursion saw its stock jump 12% in a week. The money raised from the offering is a strong vote of confidence in its pipeline and its technology, and investors are clearly excited about its future potential. But here's the thing. While Recursion showed growth in its sales and revenue for FY 2024, its net loss widened, which sent mixed signals to the market. Despite this, the stock still held its ground and even saw significant upward momentum, likely due to its long-term outlook and innovative approach to drug development. The broader market's volatility, especially in tech and pharmaceuticals, made this even more notable. Recursion, with its focus on cutting-edge biotechnologies, seems to be skating through these choppy waters while others falter. Another reason investors are watching closely? Cathie Wood's ARK investment bought a significant 161K shares of Recursion, which is always a big deal in the investment world. This sort of endorsement from one of the most well-known investors in the tech space adds a layer of credibility to the company's prospects. Looking ahead, it's clear that Recursion is one to watch. If its clinical programs continue to make progress, especially in those high-impact areas, we could be seeing even more growth in its stock price. For now, it seems like investors are betting that Recursion's unique combination of biology and tech will pay off in a big way down the road. Our review on ON Semiconductor Corporation, operating under the Onsemi brand, is a key player in the semiconductor industry, providing intelligent power and sensing solutions. With three main segments, power solutions, analog and mixed signal, and intelligent sensing, the company serves a broad range of end markets, including automotive, industrial, computing, and mobile. From power management ICs to CMOS image sensors, Onsemi plays a crucial role in driving innovation across multiple sectors. Recently, ON Semiconductor has seen positive stock movements, largely fueled by its growing presence in the electric vehicle market. The company's Power Solutions Group is seeing increased demand, particularly for components that support EV batteries and powertrains. At the same time, the Analog and Mixed Signal Group is benefiting from a surge in demand for power management and voltage regulation devices, which are vital in numerous industries. The company has been making strategic investments in high-growth areas like AI, 5G, and IoT, positioning itself as a leader in these spaces. The rising demand for connected and autonomous technologies is expected to drive even more opportunities for Onsemi in the future. With a strong focus on innovation and expansion, ON Semiconductor's prospects remain bright, especially with emerging sectors like autonomous driving offering potential growth. While the semiconductor industry can experience some volatility, ON Semiconductor's diverse product portfolio and its role in next-gen technologies make it a stock to keep an eye on as it continues to evolve and capture new market opportunities. Please subscribe, give the video a like, and watch more from our playlist. Thanks.